Welcome to the July 23rd, 2018 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. Thank you for joining us. I'm Spencer McGowan, your financial weatherman and president, McGowan Group Asset Management. A fast-paced tour of the global financial markets and insights into potential bargains that you just can't get anywhere else. We will dive right into the financial weather map here. This week was all about the banks. This is the bank stock index. Started with Goldman reporting about a 50% gain in profits. Texas Capital Bank, a powerhouse based right here in Dallas, actually reporting a 40% year-over-year gain. Morgan Stanley was 39%. Overall, it appears to be something around 15% or greater. And you can see the banks reversing what had been a downtrend. They didn't benefit from the bounce back of the Dow after that sell-off. They were in the doldrums until these earnings reports started to come to light. And recently what that says is the default rate on loans and bonds is historically low because their loan loss reserves are a big expense for them when defaults are increasing. Clearly that's not the case based on the profits, and the stocks began to take off in the financial sector. What does it mean for fixed income strategy at the portfolio level? Let's take a look there. Well, we've got bank loans, actually the best performing fixed income category on a year-to-date basis, about 2%. They yield about 4% if you buy a basket of bank loans like a floating rate loan fund. So that's been the best strategy, and part of it is the short rates rising. High yield, essentially flat for the year. Some of the rising rates and concerns about rising rates may dissipate in the second half. Where do you want to be? Well, the high yield index still trading around the 85% of par value. If defaults are only 1%, that gives it a potential gain to 98 or 99 on that index historically. Again, a low default rate was the theme that we take away, and that says there may be some opportunity in the sectors that are still at par or a discount. Emerging market local currency, the worst, because the dollar just rallied about 7%. If the Fed stops raising the short rates, that impact is likely over. Notice a Treasury portfolio was a total return of a -1%. That's the impact of what the Federal Reserve has done with the short rates. Long rates haven't gone up. The 30-year U.S. Treasury 2.96% this week. Let's move to the spot gold price. This is just a lesson for gold investors. We can see this decline here to nearly $1,200 per troy ounce. The high was near $1,900 per troy ounce. You can see the amazing rally. The commodity implosion that happened after that has taken gold into a trading range that could be an extended period. That's not the commodity strategy that most portfolios can benefit from, in our opinion. What would work for a commodity strategy? The pipeline index strong this week. We had reported during this decline that there was a misinterpretation of a tax rule. Sure enough, Federal Energy Commission came out and basically said that rule is a non-event, and they did so with 4 clarifications. The pipeline's extraordinarily strong. The strongest day this week, they were up about 3% at the opening. The pipelines, based on their historic value when oil was higher and lower, pipelines could have more to go. We call that energy infrastructure. And here, if we look at the consumer staples, this is just a notable event to wrap up our report for this week. This is like a General Mills. What you've seen here is money flows really consistent since the end of April going into this sector, and this comes from us for a different money manager, but it is notable the consumer staples and the strength that it's shown since its sell-off earlier this year, that, by the way, did not end when the Dow finished at 23,000 and then rallied back this week, spending most of the week above 25,000. Come down to the Crescent, meet the team that cares, McGowanGroup Asset Management. You can see all the details for this weekend's program with planning tips for the summer at NetWorthRadio.com. Thank you for joining us. We'll be back next week. I'm your financial weatherman, Spencer McGowan. Thank you for tuning in to our YouTube broadcast. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.